Checking out the grains first. Soybeans down 8 to 9 cents. Corn 5 to 6 lower. Wheat's mixed here. We got a WASDE report coming up. But what are you seeing here that has the grains trading this way?
Well, the bearish thing is the WASDE report combined with very good weather conditions and growing forecasts. We're seeing good rains across portions of Iowa this morning, and that's expected to move into the eastern part of Iowa and into Illinois by the weekend. Next week, we're going to see rains across most of the entire corn belt, maybe 1 to 2 inches in some cases by next Tuesday, which is going to be a really beneficial growing conditions overall for both corn and soybeans. So ahead of the WASDE report, we've seen some private estimates come out in that 188 range. There's 2 estimates out there now, one at 186, one at over 188, and that's ahead of the Newswire's publishing theirs number. So that's a big increase in the corn yields ahead of Tuesday's report. So needless to say, trade is not comfortable with those big yield numbers, and with the weather forecast that we have, it may verify that we actually have these type of yields in both corn and soybeans. But that's putting a lot of pressure against us. We're holding that psychological $4 mark for December corn. Now that it's broken, the fresh contract lows, market's searching for that next area of support. And same thing with soybeans. We've held a little bit better because soybeans haven't gone through their reproductive phase yet. But as we do, we expect we'll just continue to take some premium out of this soybean market.
Okay. And switching over to the cattle side here, hogs down. To no one's surprise, feeder and live cattle were up again. What's going on there?
Yeah, more ongoing spec buying. Cutouts were higher last night. They're higher here again at midday. Just kind of fuels the idea that we're going to see at least 2-3 cent better cash trade this week. 235, 236 was most of our trade last week in the Southern Plains. They're asking 238 up to 240 this week, and probably we'll get something similar to that as far as cash markets go. Now, the August futures have really rallied, done a good job this week rallying and getting themselves even with the cash markets from last week. Just kind of a question of how much higher will we go. If we're going to see that cash trade 238 to 240, we still can push a little bit higher yet, but we're almost back to par with the August contract back into the cash. In the case of feeders, we're actually well above the index. We're trading at 344 on the futures, and that index is well discount to it. The index this morning 336, so an $8 premium over the index. That's usually not a bullish scenario. Sometimes that's considered bearish, but we're just continuing to push this market higher on real active fund demand.